Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin, Mota.
Yatin, another day of strong gains for the index, and no points for guessing. Of course, it was fueled by the Federal Reserve because it has cut interest rates by 25 basis points. First rate cut of 2025.
Correct.
Not just that, they have hinted at 2 more rate cuts for this year, right? So that gives some clarity as to where the future rate cut path is headed. But for 2026, they've given only one rate cut, a guidance of one rate cut, but analysts aren't really much bothered about that because previous dot plots didn't really pan out the way they had envisaged. So yes, they are saying that right now they say that they are looking at one rate cut for 2026, but most of them believe that there will be much more, 2 or 3 rate cuts instead of one in 2026. But experts I spoke to say that FIIs will not be in a hurry to come back. They would want to see some bit of evidence of earnings recovery before they make a comeback to Indian markets. But largely the expectations are that they will make a comeback because earnings will see a boost as a result of the GST reforms, RBI rate cuts and the income tax cuts that was announced by the government in the budget as well. So lots working in favor of India, but it will still take some more time before FIIs really make a comeback to the Indian markets. But in terms of today's action, it's Sensex expiry today, which is why we saw some bit of volatility, Yatin. 1 hour back, we had given up some of these gains and we were below 25,350. But we managed to claw back and of course end above that 25,400 for the index. So yes, 25,450 we had come very close to that level, but now tomorrow I think we would want to go home over the weekend with the 25,500 on the charts.
Sure.
That would really be the hope.
Yes, and the markets, as you were mentioning, obviously the expiry day related volatility, but mid caps since the morning were doing well. Stock specific action continues. We saw some block deals also, especially in the likes of Cohance, wherein Advent sold 9% stake worth nearly 3,500 crores. The mid and small cap index gaining by almost 0.3%. Advanced decline ratio also looked good, almost 1:1. And look at stock specific action. Poonawalla up 12%, Zentech up 5%, Swan Corporation, Biocon, gaining and topping the charts. However, post the block deal, Cohance saw almost 6% correction. CCL products also witnessing some 6-7% correction, but clearly stocks like Laurus Laboratories, Eternal, Ashok Leyland, Maruti, Anand Rathi, Wealth, all of these stocks hitting fresh 52-week high. In fact, Anand Rathi Wealth also in focus because their sister concern Anand Rathi Stockbroking had the IPO roadshow today, and the IPO will also launch soon, worth nearly 700 crores odd. So yes, a lot of stocks in focus.
That's true, Yatin, from the large cap universe as well, since Eternal is now, so to say, 3 lakh crore rupee market cap, hit a fresh 52-week high today, and Goldman Sachs has also upped their target to 360 rupees when it comes to Eternal. Aside of that, life insurers that were under a spot of bother today made a good comeback. Look at HDFC Life, that stock is up in excess of 2% among the top Nifty gainers. Sun Pharma, there was a positive brokerage report on that, and that stock was also reacting to that. Aside of that, you had IT names. IT index, of course, was among the top gainers today alongside Pharma index. So names like Infosys did well. Although they really cooled off from the day's high, but still nevertheless ended with good gains. HCL Tech and even from Pharma, Cipla, etc. have done well. What didn't do all that well were the likes of Coal India. Bajaj Finance ended the day in the red. So did Trent. Tata Motors, Ultratech Cement, Tata Consumer saw a pop yesterday, but once again kind of came under a spot of profit taking. Asian Paints, BEL, ONGC were among some of the other movers. Well, on that note, let's take a look at some of the stocks that are on our radar then. Starting with D-Mart, Yatin, the stock ended higher by about 2% or so. There's a bullish call on this stock from UBS. They have, reiterated their buy rating, and their target price has been hiked to 5,600 rupees from 5,050 rupees. That implies an almost 20% upside from yesterday's close price. True. Now, UBS believes that it is a great compounding story, although brick and mortar stores were weighed down by competition concerns, especially from quick commerce players, right? We can see what Eternal is doing, and in terms of stock price and in terms of their quick commerce business as well. But UBS says that the company D-Mart has been seeing a consistent rise in same-store sales growth, and that quells a lot of concerns around competition from quick commerce. And of course, they are saying that that concern that it will be a big threat to brick and mortar has been quelled because of the SSSG growth rate of D-Mart, which has been in high single digits in the last few quarters. Now, some reasons why really UBS is so bullish on the on the story when it comes to D-Mart. The fact that it is expecting the company to enter a major phase of network rollout expansion, acceleration, so to say, because the company has rolled out around 130 stores in the last 3 years. But over the next 3 years, it expects the company to roll out double the number of stores that it has done over the last 3 years, around 230 to 250 stores. That's the expectation that these are the number of stores that the company may roll out over the next 3 years or so. Aside of that, it also believes that D-Mart is also the key beneficiary of organized grocery retail, and this could help the company to net consistent growth rate at 18 to 22% for many years, and this will also limit any kind of valuation derating also for the company going forward, and it also makes the valuations tenable at these levels. The base case factors in a 3-year revenue CAGR of 20%, which limits any material valuation derating. Bull case assumes 22% revenue growth on faster network rollout and growth in D-Mart Ready as well, and that could imply a potential upside target of 6,600 rupees on the stock. So that's the bull case. Bear case says that the revenue growth rate could be at 18 to 19%, which would lead to a price target of somewhere around 4,400 rupees or thereabouts. But the key risks, of course, would be failure to execute the network rollout in a timely manner. That would be the key risk. And if at all some competition weighs down same-store sales growth, that would perhaps establish that fine, there could be some threat, big threat from the quick commerce players. Now, if you look at the stock, it has been up 33% in this year itself on a YTD basis, 17% in the last 3 months. Despite that, UBS believes that risk reward is looking favorable at current levels. The stock, of course, has been a multi-bagger, Yatin, ever since it has listed, but it is still, a distance away or a mile away from its 52-week high of 5,484 or thereabouts. But D-Mart, mutual funds have trimmed their positions in the stock in the month of August. But UBS here has said that they have faith in this stock as a consumption story of India.
And as you were mentioning, one of the stocks in the IPO start days, we have seen strong results. The stock has been consolidating off late, but yes, brokerage still believe that there is a good upside when it comes to D-Mart. But talking about other stocks which are in focus, PNB Housing, and that is one stock which has been under pressure ever since we had the senior management resignation. However, we have brokerages like Morgan Stanley which still are overweight on the stock with the target of 1100. Now, the stock now trades close to its price to book value. The management, however, has reiterated, which is the management currently on board, that there will be a 18% retail loan growth for FY26. They've guided for a net interest margins in excess of 3.6, 3.7%. Obviously, we have the lower borrowing costs, which also will mean better margins as we come into coming quarters. But the CEO selection process is something that the markets are looking for. And Morgan Stanley is hopeful that by October end, we could have a new CEO. The application for the CEO's post was probably invited and closed last week, and now the company is in the process of shortlisting. Obviously, PNB is one of the largest stakeholder, which is the PSU Bank, and PNB Housing on your screen there, almost 3% higher for this stock, almost trading at the day's high post as Morgan Stanley note.
Yeah, I think in today's move also takes the monthly return on the stock to almost 10%. Of course, the CEO selection, that would be the big trigger for the stock going forward. But the other stock on my list is once again from the consumption basket, Page Industries. Yesterday we were talking about Gen Z, how everybody is catering to this segment. Even Page Industries has launched a new product line to cater to India's Gen Z population. But it hasn't really gone down very well with HSBC. It has kind of a bearish call on the stock. It has a reduced call, and the target price is at 41,040 rupees per share, which implies a 10% downside from yesterday's close price. Now, it is cautious of the company's growth outlook and the changing product strategy as well. Now, HSBC is of the view that the company is moving away from its primary strength, which is athleisure, but it was mainly focused on families at large, not like just a particular segment. But now they have launched a new fashionable range of products under Jockey Groove. Now, this branding was launched in mid-May. This, of course, fashion brand offers athleisure products to a younger population target audience, as I mentioned, Gen Z. This launch, according to HSBC, is a shift away from its core business and low inventory risk focus that the company has always had. And, in terms of margins as well, the company has been doing well. But HSBC says that the margins may have peaked out. I think the first quarter margins were 22.4%. And it expanded by 340 basis points, but that has peaked out as raw material costs have stabilized, and of course employee costs are expected to go up as production ramps up under this product diversification as well. They have cut their profit estimate as well by 3% on weak demand trends in recent quarter. Of course, we have seen urban demand consumption slowing down, but that could of course change with the whole GST reforms that was announced by the government, but that really remains to be seen how it pans out for Page Industries. But for now, the diversification into this new product line is something that hasn't really gone down well, and it would want to see how that really pans out, because it's away from the mainstay of Page Industries, so to say. But the stock, I think last 6 months you'll see the stock had done well, but over the last 3 months or so it has lost its fizzle. In fact, last 3 months it slipped somewhere around 10% or thereabouts, and in May itself it had launched this product line. So, hasn't really been all that great for Page Industries ever since.
And after this report, the stock is down 2.5%, almost at the day's low, as you can see the charts on your screen.
That's true, Yatin. But yes, has been a good day of trade, third straight day of winning streak for the market. Let's hope tomorrow we end on a high as well and end the week on above that 25,500 level. But for now, I think all the major cues are out of the way.
Yes.
Let's see how things really pan out here on. But analysts are of the view that whatever dips come by, it's better to go and buy them. And that's what we've been witnessing any which ways. So yes, that's about the market. But with that, of course, we've come to the end of this edition of Closing Bell. From me and Yatin, thanks a lot for tuning in. Of course, we'll be back with the markets at 9 a.m. tomorrow. Don't forget to tune in. But before we go, here is a message for our viewers. Introducing Moneycontrol Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Moneycontrol app and subscribe to Super Pro today itself.